The global jewelry market is on track to hit $578 billion by 2033, and right now, a quarter of all jewelry sales are already happening online. If you've ever thought about starting a jewelry brand, this is the window. Hey everyone, I'm June with Branvas. Today we're breaking down the most important jewelry industry data and trends for 2025 and 2026 and what it all means if you want to start a jewelry business online. Stick with me, there's a lot of gold in this one, pun fully intended. Let's start with the big picture. The global jewelry market is valued at roughly $382 billion in 2025, and it's projected to grow to about $578 billion by 2033. That's a compound annual growth rate of 5.5%. Now, where is all that growth happening? Asia Pacific is the powerhouse, over 60% of the entire global market. A rising middle class, higher disposable incomes, and deep cultural ties to gold and precious stones are fueling demand in countries like China and India. Meanwhile, North America is no slouch. The market here was about $78 billion in 2024 and is projected to approach $98 billion by 2030. And here's the thing, a big driver in the US is self-purchasing. People aren't waiting for someone to buy them jewelry anymore. They're buying it for themselves as a form of self-expression, especially millennials and Gen Z. Europe is growing steadily too, at about a 5% CAGR, with consumers there really prioritizing craftsmanship, heritage, and sustainability. And then you've got emerging markets in the Middle East and Africa picking up steam thanks to luxury tourism and rising incomes. The takeaway? This is a massive, growing global market, and there's room at the table for new brands. Okay, now let's talk about where these sales are actually happening, because this part is key if you want to sell jewelry online. The old idea that jewelry is a touch and feel category that can't work online, that's dead. In 2025, online jewelry penetration hit about 25% of total global sales. And the online jewelry market alone is projected to be worth almost $86 billion in 2026, growing at 13% year over year. That is significantly faster than the overall market. So, what's driving this? A few things. Augmented reality try-ons, high-quality 360 product images, and better return policies have removed the friction that used to hold people back from buying jewelry on a screen. And then there's the rise of direct-to-consumer brands. DTC brands are cutting out the middleman, offering better prices, and creating way more personalized shopping experiences. They're using data to understand exactly what their customers want and delivering on it. Now, interestingly, the segment that's slowest to move online isn't luxury, it's mid-market bridal. That's still very much an in-store experience. But for fashion jewelry, semi-fine pieces, everyday wear, online is where the action is, and it's only accelerating. All right, so who's actually buying all this jewelry? Let's talk about the generational shift, because this is probably the most important force reshaping the entire industry. Millennials, ages 30 to 44, are currently the generation most likely to buy their own jewelry and the most willing to spend big. We're talking $500 to $2,500 on self-purchases. But Gen Z is the one rewriting the playbook entirely. Here's a stat that might surprise you. 80% of Americans now say they're more likely to buy fine jewelry for themselves rather than wait for it as a gift. That's a massive cultural shift. Jewelry isn't just for engagements and anniversaries anymore. It's about self-expression, identity, and celebrating your own milestones. And how are these younger consumers shopping? They're digital natives. They're discovering brands on TikTok and Instagram, buying through social commerce, and going straight to DTC brand websites. Picture this. A 26-year-old sees a layered necklace set on TikTok, buys it for $68 right there in the app, and then comes back within 60 days for a second purchase after getting a personalized text message. That loop: discovery, low-friction purchase, great unboxing, retargeting, repeat buy. That is the engine driving DTC jewelry growth right now. And the motivations are different too. Younger buyers care less about jewelry as a status symbol or investment. They care about emotional connection, aesthetics, and whether the brand aligns with their values, sustainability, diversity, unique design. If you're building a jewelry brand, this is your customer. So here's where it gets interesting. Let's go deeper into what today's jewelry buyer actually cares about, beyond just the piece itself. First, sustainability. This is no longer a nice to have. Over 70% of consumers now consider sustainability when making purchase decisions, and many are willing to pay more for it. Ethical sourcing, recycled metals, transparent supply chains. These things matter. And look at lab-grown diamonds as proof. They now account for over 45% of U.S. engagement ring sales. They're more affordable, and they check the ethical box. That's a massive market shift driven directly by consumer values. Second, personalization. The personalized jewelry market is booming. People want custom engraving, birthstone options, modular designs where they can co-create their own piece. Jewelry has become personal storytelling, a meaningful date, a set of coordinates, a unique gemstone combination. If your brand can offer that, you've got a real edge. And 30, and this one is huge, the unboxing experience. Brand trust in the digital age is built through authenticity and experience. And here's something a lot of new founders underestimate. Packaging and unboxing drive repeat purchases and organic social media content way more than most people realize. It's rarely about the product alone. When someone opens a beautifully packaged piece of jewelry and it feels special, they share it. They come back. That's where platforms like Branvas really shine, because private label packaging is built into the model. Your brand, your experience, handled for you. Now, let's talk about one of the most exciting trends in the space, the explosion of private label and influencer-led jewelry brands. The barriers to entry have never been lower. The old model of buying wholesale inventory and reselling it, that's being replaced by agile, direct-to-consumer operations that move fast and lean. Influencer commerce is a huge catalyst here. Creators with engaged followings are launching their own jewelry lines and hitting multi-million-dollar revenues within just a few years. Why does this work? Because these brands are built on trust and aesthetic alignment with an audience that already exists. Private label manufacturing lets them bring quality products to market quickly without the overhead of running their own production facility. But here's the thing, you don't need 1 million followers to do this. What you need is clarity. At Branvas, there's actually a framework called the Brand Readiness Score that helps aspiring founders figure out where they stand. It looks at 5 factors: your audience size and engagement, your niche clarity, your brand identity, your operational readiness, and whether you have a product-market fit signal, meaning, have people actually asked you for products? If you score high across those 5, you could realistically launch within 90 days. If you're earlier stage, the move is to invest in content and community first, then layer in product. Branvas works with founders at every stage of that journey, so if you're curious where you fall, check out branvas.com. I'll drop the link below. All right, so what's actually selling the best online right now? Let's break it down by category. Rings are king. Fashion and semi-fine rings account for about 34% of market revenue. They're the top seller, with average order values ranging from about $85 to $150. Private label viability? Excellent. Next up, necklaces, especially layered and pendant styles. These have very high year-over-year search and sales growth. Average order values run $60 to $120, and they're also excellent for private label. Earrings, hoops, and studs in particular are a strong category too, with average order values around $45 to $90. Moderate growth, but still high competition. Bracelets, especially chain and charm styles, sit in a sweet spot. Moderate growth, medium competition, and good private label viability. That could be a smart entry point for a new brand. Fine jewelry and bridal? That's a different game. Average order values are $1,500 and up, but online growth is low and private label viability is challenging. The trend thread running through all the top categories is social media influence. Layered necklaces, stacked rings. These are trends born on Instagram and TikTok. Brands that can spot and act on these trends quickly are the ones capturing market share. Okay, let's zoom out and look at the bigger forces that are reshaping jewelry e-commerce as a whole. There are 4 major ones to pay attention to. Number 1, social commerce. Platforms like TikTok Shop and Instagram aren't just marketing channels anymore. They're becoming primary storefronts. U.S. social commerce is projected to exceed $100 billion by 2026, and TikTok Shop is driving massive volume through seamless in-app purchasing. This is a fundamental shift from search-based shopping to discovery-driven buying. Number 2, AI-driven personalization. We're way beyond basic product recommendations now. AI-powered virtual try-ons and custom-designed tools are increasing conversion rates by up to 94%. That's not a small bump. That's game-changing. These tools bridge the gap between online and in-store experiences and give brands incredible data on what customers actually want. Number 3, the resale and secondhand market. Driven by sustainability and smart economics, the secondhand jewelry market is projected to hit $5.5 billion by 2033. Younger consumers especially see secondhand as a way to get quality pieces at better prices while being environmentally responsible. And number 4, supply chain evolution. Brands are moving toward nearshoring, sustainable certifications, and agile DTC manufacturing partnerships. The pandemic exposed how fragile traditional supply chains can be, and smart brands are building in more flexibility. This is another area where Branvas' model really makes sense. Sourcing, fulfillment, and private label packaging handled for you so you can stay agile. So, what does all of this mean for you? Someone who wants to start a jewelry brand or grow the one you've already got. The data is clear. Here are the 4 moves to make. First, embrace social commerce. Treat TikTok and Instagram as actual storefronts, not just places to post pretty pictures. Invest in high-quality visual content and partner with creators who align with your brand. Second, prioritize the unboxing experience. Premium, sustainable packaging drives user-generated content and repeat purchases. Every detail matters: the materials, the presentation, even a personalized note. Third, lean into personalization and sustainability. These aren't trends, they're expectations, especially from Gen Z and Millennial buyers. Highlight ethical sourcing, offer customization, and make it easy for customers to create something meaningful. And fourth, leverage agile manufacturing. Use private label and brand-as-a-service platforms to launch quickly and scale without drowning in inventory risk. At Branvas, we see a clear pattern. The founders who launch lean, validate with a tight product range, and build community before scaling inventory, they consistently outperform those who overinvest in product upfront. If you're ready to start a jewelry brand or scale an existing one, Branvas gives you the infrastructure to move fast without sacrificing quality. Head to branvas.com to see how it works. Here's the bottom line. The jewelry market is massive, growing, and shifting online faster than ever. And the tools to start a jewelry brand with no inventory have never been more accessible. If you want to start selling jewelry online, head to branvas.com. Link is in the description, and see how easy it is to get started. If this video was helpful, hit that like button, subscribe for more e-commerce breakdowns, and drop a comment telling me, what jewelry category would you launch with first? I'm June. See you in the next one.